Okay, so from last lesson, we already know about accounting cycle. Start from analyzing transaction. Analyzing transaction. You know what is transaction. Any event that change the financial position of the company, right? And you did analyze the transaction using very basic approach, which is counting equation. Okay, to analyze the effect of transaction on asset, liability, or equity. And then next, you learn how to record that transaction in a journal entry. So you know how to make journal. Making a journal means we document a transaction. We record that transaction. Okay. And in this part, you learn what we call as double entry. Double entry. In every single journal, there should be at least 2 accounts involved, right? One on debit, one on credit. So at least 2 accounts involved. In this journal also, you learn the normal balance of the account. We thought that we learned that asset has debit normal balance, liability has credit normal balance, and equity has credit normal balance as well. So we learned that, and then last week, and then we know how to play with that rules, how to play the debit and credit rules. And I said many times that debit and credit is simply left and right. Okay, I hope you still remember that part. And then you also learn how to post the journal. Let me use recording journal, then posting to general ledger. So you know how to post from journal, the record from journal to general ledger, right? And you did it manually through the assignment I gave last week. So you did it manually to move that balance from journal to the general ledger. And you know that general ledger is actually a single record, as a record for a single account, right? Record for an account. Okay. And then last week lesson also tell you about summarizing the balance of general ledger into trial balance. Right? Okay. It's actually a list of account and its balance. We start from, we list the account from asset to expenses, and we have 2 columns, debit and credit, to put the balance on the right column. So we already learned this 1 to 4 steps last week meeting. And on your assignment, there's also a question. I hope you still remember the last question of the assignment. The last question of your assignment asks whether the difference between revenue and expenses reported on the trial balance. So this is the trial balance. You report revenue on credit. You report all the expenses on debit. And the question number 5, asks you whether the difference of this revenue and expenses is a net income or not. Can you say that the difference between revenue and expenses on that trial balance is a net income or not? Okay, so let me hear your voice. Let me hear your answer. You can open your assignment, your last week assignment, and please tell me your answer for the question number 5. Okay. For question number 5. Okay. So we'll start. Anyone? Please be volunteer. If you have idea to answer question number 5, just speak up. Don't be shy. Don't make me appoint you. So just be volunteer. Question number 5, last week assignment. No one want to speak up. Okay, so let me ask you then. Haikal Rafsanjani.
Yes,
what is your answer?
For what I typed for number 5, perhaps unexpected changes or adjustments occurred or happened during the end days of the month that affects the accounting period or process for June, for the month of June.
Do you understand what you said?
Yes.
Okay, so just please explain in a normal way. So what do you mean with that answer?
What do I mean?
Yeah.
From what I catch, wait, let me see the question again.
Can you think of any reason why the amount determined in number 4 might not be the net income for June? So stop share and show you the question. Okay. So,
baik saudara sekalian, hari ini kita belajar sesuatu yang mendasar, yang basic.
Any sorry. So Haikal, what do you mean with that answer? Or give me example. If you don't know how to explain, just give me example to support what you said.
From what I catch is basically there will be just an adjustment on the journal later on different periods
Adjustment. Okay.
Yes, because so the net income is not fixed.
Yeah, and you open another question. What is adjustment? What do you mean with adjustment? Why do we need that adjustment, and in which part that need adjustment?
Wait, I'm suddenly confused by myself.
Okay, so thanks. Let me ask another student if they have a better explanation about the answer. So let me ask Zahira, Aurelia Zahira.
Yes.
Okay, so what is your answer for number 5?
My answer is similar to Haikal because different adjustments are usually needed at the end of an accounting period. Can I just give an example?
Okay, give me example then.
Like adjustment for the supplies that they'll use for the insurance period.
Mm-hmm. Why do we need adjustment for the supplies and insurance premium? Okay. Your answer is correct. But I think you don't know how to explain that answer in a simple way. So thanks. So guys, if you see this transaction, there are many transactions here, and some of them are unfinished yet. Some of them are unfinished yet. For example, transaction on this date, June 10, the company purchased supplies for cash, 1,800. Okay, the company purchased supplies for cash, 1,800. So once the company purchased, we record asset, we record debit supplies because we have, the supplies increase. So we debit supplies and we credit cash because we give some cash, we pay some cash. Okay, but till the end of the month, the supplies is still 1,800. If you check your trial balance, you can see that the balance of supplies still 1,800. However, in a common sense practice that the supplies should be used in a business. The supplies was used, right? The supplies is not just fixed 1,800. The company will. The company would use the paper, would use the pen, would use the ink, the printer ink. They would use the supplies during the month for the sake of business, for business purposes. However, our supplies balance still 1,800. Okay, mean that there must be. These supplies need adjustment. For the usage of the supplies. We never record the usage of the use of supplies. So from June 1st till June 30, nothing about nothing entries made to record the usage of supplies, the use of supplies. So it doesn't make any sense for us to have supplies in a fixed balance, because we use that supplies, mean we consume the economic benefit of that supplies, mean we should reduce the balance of the supplies, okay, because we use the supplies. If you didn't get my explanation, just speak up. So don't just keep silent and I don't know whether you understand or not. Okay, so we need adjustment. What your friend tell you, what is adjustment actually? We need to adjust the balance of supplies due to the usage of supplies for business. And there is no entry made to record that transaction, the use of supplies. Okay, another thing is June 15. So on June 15, the company paid annual premiums on for the insurance, because this is annual premiums. The insurance give the company protection for a year. So start from June 15, year T, suppose this is year T, until June 14, year T plus 1. So the protection goes this line, 12 months. Okay. However, in the end of June, some of the protection period expired. Okay. Some of the protection period expired 15 days at least. So June 30, so from June 15 to June 30, the protection period expired. Right? The protection period expired here. Okay, when we pay that premium on June 15, we expect we will be protected by the insurance company for 12 months until the end of the year, right? June 14 next year. Because we expect we will have, or we will enjoy, we will be protected, we will get economic benefit from the insurance. We record this June 15 as a prepaid insurance, prepaid insurance. And this prepaid insurance is part of asset with number 114. If I remember correctly, 114. So we record this premium as an asset. So we debit prepaid insurance, we credit cash, and we classify this prepaid insurance as an asset because we expect that this insurance will give us economic benefit for the year, for a year. Okay. However, by the time goes, the economic benefit expired. So if we pay the premium on June 15, And then we are now in June 30. 15 days, already 15 days, the economic benefit was expired. Okay, so if a year is 365 days, if a year is 365 days, by the end of June, now our protection day become only 350 days, and the rest 15 days already expired. Okay, so our economic benefit, the economic benefit of the insurance expired. Mean we need to adjust the balance of this insurance premium. The insurance premium, I mean the prepaid insurance, is no longer 2,700. It must be less than 2,700 because 15 days from 365 days already expired. Okay. Again, if you didn't get my point, please raise hand or just speak up. Otherwise, I will assume that you are fine there and you know what I'm explaining to you. Okay, because we need this adjustment, at least two adjustments from this example. Supplies and annual premium, and then the difference between revenue and expenses on the trial balance cannot be is not a net income because some of the balances need to be adjusted to reflect the economic position in the end of June. And from the example, we can point two things. First, from the supplies and from the annual premiums that need to be adjusted in the end of the June. Okay. So that brings to our topic today, adjustment process. So this introduction, I think, enough to give you insight why do we need adjustment. Okay, let me jump to the platform. Okay, so we already answered why the difference between revenue and expense on the trial balance is not an income. It's not a net income yet because some of the expenses are not recorded yet because some of the balances need to be adjusted to reflect the current position of the company. And last week, I told you that accounting use what we call as accrual basis. I think I told you last week, accrual basis. Can anyone please explain what do you know about accrual basis? What you can say, Zidane, Ahmad Zidane, what do you know about accrual basis? I think last week I told you.
Accrual basis. About accounting technique. I forgot, sir.
Yeah, at least you try. At least you try. Try to find the answer. Jipo Adi, please tell me, what do you know about accrual basis?
From what I've known, that on accrual basis, revenues are reported as an income when they were earned. So, like account receivable are not reported as revenues.
Okay, okay. Your last statement is not correct, but the first statement is correct. So in accrual basis, we record revenue when it is earned. E-A-R-N-E-D. Okay. Oh my God. It's very bad. Very bad handwriting. Okay. Earned. So when a revenue earned, when the firm or the company perform okay, I hope you know what I'm writing. Perform its obligation to deliver goods or service. In short, when the performance obligation done, So you record revenue when the performance obligation finished and regardless the cash. We don't care the cash. Once the performance obligation finished, done, then record revenue. For example, a customer purchased some inventory from the business and you already delivered the inventory to the customer. Once you deliver the inventory, then you record revenue. Although the customer has not paid yet. That's why we record accounts receivable when the customer has not paid his obligation. However, we have to focus on our side as a business, just deliver the inventory, deliver the service, and done. So again, revenue recorded or recognized when the firm perform its obligation to deliver goods or service, regardless the cash. Regardless the cash, I have to write this one. Regardless the cash. So we don't care the cash. On the other hand, expenses are recognized when the firm consume the benefit of asset or service. Again, regardless the cash payment. So once the company consume the benefit of an asset, so like supplies, then the company or the firm should record an expense to declare, to report that the business already consumed an economic benefit, the economic benefit of an asset or service. Right. So when the company consumes service from its employee, then the company should record salary expense for them, for the employee, regardless the cash. So regardless the cash, you can pay the cash later. But once you consume that service, you have to record the expense. This is what we call accrual basis. So in accrual basis, the revenue and expenses are recorded when they are occurred. When they are occurred. Regardless the cash, we don't care the cash. We don't care about the cash payment or cash receipt. Once the revenue or the expense occurred, then record it. And I already explained the criteria here. Okay. And from this principle, there are two types of transaction that can be happen. Two types of transaction. Because there's a difference between cash payment or cash receipt and the occurrence of revenue and expense. So the cash receipt or payment and the occurrence of revenue and expense is not equal, is not in the same day, then there must be mismatch. Okay. So from the accrual basis, the effect of accrual basis, it creates two type transactions. The first transaction called deferral, or to make it simple, prepayment. Means the cash is in advance. However, the revenue or the expense are not occurred yet. Okay, let me give you an example. So, just an example. When you purchase supplies, purchasing supplies, the supplies on cash, purchasing supplies on cash, the supplies will give you benefit in the future, not directly when you purchase that supplies, right? Because the supplies will give you future benefit, then you record the supplies as an asset. So you debit supplies and you credit cash. Supplies here categorized or classified as an asset because the supplies still contain future economic benefit. Later, so again, it is I want to highlight that it's related to the deferral of prepayment. The cash is in advance because I already paid the cash. However, the expenses are not occurred yet. The economic benefit of the supplies is still full, is not consumed yet. However, in the end of the period, when the supplies use means the benefit of the supplies decrease or consumed, then you have to record an expense. Okay, so in the end of the period, we make an adjustment. We record supplies expense and we reduce the balance of the supplies because we use the supplies. Supplies expense represent the benefit of the supplies that already expired, that already consumed. Okay, again, please ask me question if you didn't get what I'm trying to explain to you. If you didn't get my point, just ask me question. Okay, Anggi.
Okay, thank you for the opportunity, Pak. I would like to ask a question. So based on your previous explanation regarding this accrual basis, it's like a method where the revenue or expenses is recorded when a transaction occurs rather than when the payment is received. But my question is, I also heard once about cash basis, and what's the difference between accrual basis and cash basis?
Okay, good question. Cash basis is actually a traditional approach of accounting, but we don't. Why do I use traditional? Because cash basis is not commonly used for business because it's quite simple. So back to the previous notes here. So in cash basis, revenue and expenses are recognized when the cash received or paid. So any cash received is called revenue, and any cash payment is called expenses. So I think that's very simple. That's quite simple. So based on that concept, you will not recognize any revenue unless you get the cash. In other words, you will record revenue when you get the cash. So all the revenue will be recorded on cash. All expenses will be recorded on cash. However, this approach is not fair from the perspective of business. In our modern business today, I think it's common for business to send the inventory or to perform the service for the client or for the customer in advance, and then you bill the customer later, and then you get the payment later. I think it's common. But if we use the cash basis in this economy, then you will not record any revenue until you get paid. And another problem, cash payment from your customer. Cash payment from your customer will be recorded as revenue, although the firm or the business has not performed the obligation yet. So for example, your customer gives you a down payment for future service or future inventory delivery, and you receive that down payment and you record that down payment as 2 days revenue. However, the obligation is still in the future. The service will be done next month or next year. So in that sense, cash basis is not appropriate to be used in the modern economy or modern business. But it still can be used for, suppose for individual accounting or for small organization accounting, it's fine. But for modern accounting, we cannot use that because it creates problem in the end. At least the two things that I explained to you. You record. I mean, you don't record any revenue, although you already send your service or you already send your inventory to the customer, or you record revenue although you haven't performed your obligation. So I think it's not fair. So and you can read the book regarding this issue, cash basis accounting. However, we don't use in our school, we don't use in our modern accounting.
Okay, thank you for your comprehensive explanation, Pak.
Okay, another question related to the first point of accrual basis, which is deferral or prepayment. If you have any question, just ask me, just speak up. Don't just keep silent. Okay, Naufal, please.
So I would like to ask about, so is it customer satisfaction affect the revenue?
No. Whether the customer satisfied or not with your performance, when you perform, I mean, when you finish performing, finish delivering the inventory, finish rendering the service, done, revenue recorded. Although in the future your customer complain, it doesn't matter. It doesn't matter. I think it's different thing, right? Who should take care that customer is not accountant job? It is a marketing job. So marketing should calm the customer, should service. I mean, should give high quality performance. what we are doing now is to record what the business done. However, customer satisfaction will be I don't want to say will be recorded, but accounting will show that there is problem in your marketing. For example, if we do sales analysis and we see a downward trend, so the sales decreasing each year, means there is a problem with the market. But we don't know. Marketing should do the research. So the accounting process is independent from the customer satisfaction. Any other?
Okay, thank you, Pak.
Okay, back to my point here. In prepayment, you pay the cash in advance, and then, or you receive the cash in advance, but the expense or the revenue are not occurred yet. The first example I give you is supplies. Purchasing supplies on cash give you supplies which contain future economic benefit. So you record the supplies as an asset. However, in the end of the period, you have to adjust the supplies balance due to the usage of the supplies. In other words, when you use the supplies for your business, then you have to record supplies expense. One. Another example related to this. Another example, still deferral or prepayment. So accrual basis, the first prepayment or deferral. Another example is paying paying insurance premium in advance. Okay, so if you pay insurance in advance, suppose you pay the insurance on like June 1st. Okay, you pay the insurance here, and this insurance will give you protection until 30 of May, right? 12 months protection, right? So because when you pay on June, this insurance will give you future benefit. Okay, will give you future benefit. Sorry, year T, and this is year T plus 1. Because this premium gives you future benefit, and then you record this as an asset called prepaid insurance, which is an asset, and then you credit cash. Okay, again, this prepaid insurance will give you 360 days protection. Okay, then in the end of the period, you need to make you need to recognize that some of the economic benefit already expired. Suppose you need to prepare financial statement in the end of December, 31st December. Okay, you prepare financial statement on that date. So from June to 31st December, the protection period already expired. You still have around 5 months left, but 7 months expired. 7 months expired, 5 months protection still there. Okay, so to record this the economic benefit that already expired, we need to make adjustment by recording insurance expense and credit or reducing the prepaid insurance. Okay, we record insurance expense to capture the economic benefit that already expired. We credit insurance expense to reduce the economic benefit of prepaid insurance. Okay. Question? No? Everything is fine? Okay. Next. Still prepayment. Still prepayment. I have PowerPoint actually, but I don't like that. I don't like PowerPoint. So I prefer to write everything through the step that I use. I don't like the PowerPoint from the publisher. Accrual basis. The first type is deferral or prepayment. So last two examples related to expense. So now we can turn to another example. Cash received in advance for future service. So the revenue is not earned. Okay. So suppose the company received advance payment, from customer for future service. So once the business receives that payment, of course the business will debit cash. Okay. However, because the business has not performed its obligation yet, the business will record unearned revenue on credit, and this unearned revenue is actually a liability account, because by receiving that cash create obligation in the future to perform or to render service for that customer, right? Okay. And then when the business render the service, okay, then the liability is done. The liability is finished. Okay, an adjustment should be recorded to close the unearned revenue. Now it becomes revenue, because now the business already gave the service to the customer. Is everything fine with you guys? Okay. Okay, don't worry. I will download this notes and I can share with you this note through Aula. So you don't need to record anything that I already wrote in this whiteboard. So everything fine? Okay. The first type, due from, prepayment. It can be related with expense and also revenue. Okay. Now we turn to the next type of accrual transaction. Now we call this type as accrual as well. What do I mean with this? Revenue or the expense are occurred, but the cash is not, has not paid or received. Cash has not received or paid. I think it's common. For example, providing service on account mean the customer has not paid yet, and then you will record accounts receivable and revenue, right? Another example is consuming service on account. So the firm or the company already consumed the service from the supplier or from the labor, but the cash is not paid yet. So in that regard, we record expense. However, because because there is still an obligation to pay, and then we have to record expense payable or expense liability, or there are many account used to this thing. Sometimes people use accrued expense. Sometimes they use payable. They can put any term before payable, like wages payable, service payable, or another thing. But it's actually a liability account, right? So after consuming the service, the company should record an expense, so they debit expense. But because the company has not paid, and then it creates a liability or obligation to pay in the future, so the company should record a payable or accrued expense, whatever account the company use. Any question? Nothing? Okay. The last thing. Still from accrual basis, there is another type of transaction that we have to make adjustment, and it's called depreciation. I think the principle is like prepayment or deferral. Okay, the first type of accrual basis that I told you before. So what do I mean with depreciation? Suppose I have an asset. This is fixed asset. So what do I mean with fixed asset? Is a physical asset with long-term benefit. Long-term means the benefit is more than 12 months. Okay. Suppose this is an asset, fixed asset, like computer, okay, computer or printer or whatever, or building or machine. And this fixed asset actually contain economic benefit. So this red dot, okay, this red is economic benefit of the asset. Okay. So if it is a computer, then the computer contains economic benefit. You can do programming, you can do many things with the computer. It contains benefit. Okay. So when you use the computer, okay, when you use the computer is still there. It's still the same computer. However, some of the benefit is gone because of the usage. the benefit of the asset expired or consumed. But again, the computer is there. The fixed asset is there. The physical thing is still there. But the benefit is done, is gone. So before we use the computer, the benefit is full, right? Now, in the end of the year, the benefit, some of the benefit expired or consumed. Okay, and back to the what do we mean with accrual basis? We record expense. We record an expense when the company consumes economic benefit of an asset. So in the end of the day, in the end of the period, the company should record an expense due to this consumption of the economic benefit. Then the company record depreciation expense. Depreciation expense on debit side. What is on credit side? On the credit side, we do not credit the asset. No, we cannot credit the asset. Why? Because the computer is still there. The building is still there. The machine is still there. It's still functioning. It's still working. But the benefit expired. The benefit consumed. So instead of crediting the asset, we record an account called accumulated depreciation. What is accumulated depreciation? It is a contra account. The opponents of an account. The opponents of an account. A contra account that accumulate the expired benefit. On the financial statement, we record this accumulated depreciation just below the asset. So if we have fixed asset, for example, we have $100, and then we report accumulated depreciation, for instance, $20, then the net balance of the fixed asset is 80. Means that the fixed asset contain 100 economic benefit and 20 of them already expired. So now the fixed asset contain 80 economic benefit. However, the physical shape of the asset is still unchanged. Okay, the physical thing, the physical shape, the physical dimension of the asset is still there. Nothing changed. However, the economic benefit decreased because of the consumption. Yes, please.
So I want to ask, how do you determine the accumulated, accumulated depreciation, like this exact amount? How do you,
Okay.
determine that?
Yeah, I think, let me correct your answer, your question. I think it's not about how to determine the accumulated depreciation, but how we determine the depreciation expense. So how much of economic benefit that already consumed in a period. So for example, you have computer, and the computer, according to an expert, the computer can be used for 4 years, suppose 4 years. So if you use that computer in the same manner during these 4 years, we can assume that the benefit will be decreasing in a pro rata number during these 4 years. So let me give you an illustration here. Suppose you have computer, okay. Yes, this is computer, and according, okay, how much the value? Okay, put value here. Suppose it is $1,000, and according to the expert, you can use this computer for 3 years, or let me change, 4 years. So if you use the computer in the same manner, again, for these 4 years, it means that the computer will be depreciation. Okay, let me use it. The depreciation of the value of the computer will be 1,000 divided by 4, which is 250 per years. So 1 year, the depreciation will be 250. So you will report the asset, I mean the computer, on your financial statement. Computer will be reported as 1,000. In the first year, the accumulated depreciation is 250. So in the end of the first year, the economic benefit of the computer is 750, right? Sorry, let me use this as a comment. First year. Second year, you do the same thing. That year, the same amount of computer. It is 1,000. Nothing changed because the computer is still there. The keyboard is there. The monitor is there. Nothing changed with the physical aspect of the computer. However, in the end of the second year, the accumulated depreciation now 500, because you already consumed 2 years economic benefit of this computer. Then the net asset or the net value of the computer is 500. In year 3, the accumulated depreciation will be 750. So the computer value is now 250. And in the end of the year 4, your computer completely expired. In terms of value, completely expired in terms of value. Okay, finish. In terms of value. Regardless the physical aspect, the physical function of the computer. If the computer is still good, is still working, and you want to use that computer, and then you can do you can what I should say, you can write off this accumulated depreciation to start from zero again. But this topic will be discussed later after midterm in the topic fixed asset. So in this chapter, what we learn is only how to record, or how to recognize the consumption, or how to recognize the expired benefit of the asset. That's all. How do you calculate the amount of the depreciation each year? I think it will be discussed later after midterm. But for this meeting, for this chapter 3, we only learn how to record the consumption of fixed asset economic benefit. I think I answer your question. Anyone else? No one? Okay. Then let's see an example. Okay, so let me download this. Download as PDF. Save folder. Okay. Okay, let me change to show you this. Okay, I already posted this brief practice exercise on Aula, so you can work after the class to review your understanding. So from the previous lesson, you know how to prepare trial balance, right? You already knew this. How to prepare the trial balance. And then from the trial balance, we see some item here. We see supplies, 4,500. Okay. We also know this prepaid insurance, 9,000. Supplies, I think it rings bell on your mind, or in your mind. Supplies, okay, you already pay the cash. Already paid the cash for the supplies, and the supplies contain future benefit. Okay, and you need to adjust later if you use the supplies, right? Similarly, prepaid insurance, you already paid the insurance premium, and the premium gives you future benefit, give you future protection. Then you need to adjust the insurance later when the protection period expired. Okay. And then we have land, a fixed asset, equipment. Oops, sorry. The equipment, 48,000. Accumulated depreciation, 10,500. Okay, still, please remember what do we mean with accumulated depreciation. It is accumulated expired benefit, accumulated consumed benefit. Okay. Payables, we know some payables, equity, revenue, and some expenses there. Okay. So there are 5 items need to be adjusted. Okay, I think it's quite basic for this accounting, for this introduction to accounting. This is what these are what you need to adjust. So you don't need to find by yourself. Okay, we provide you do adjustment for these 5 items. Okay, the first item, services provided but have not been paid. Okay, so the business already provided the service, but the customer has not paid yet. So how do we make adjustment for this? Anyone can answer? We already provide the service, means we can record revenue, but because the customer has not paid yet, then we record accounts receivable. So what is the entry? We debit trade receivable and we credit service revenue. Right? Question? No? Okay. So trade receivable increase, service revenue increase. Second, supplies on hand is 3,000. So according to the trial balance, the balance of supplies is 4,500. 4,500. And now the supplies on hand after physical after physical account, physical counting, the supplies on hand is now 3,000. Means the business already consumed 1,500. Okay, the business already consumed 1,500. Right? So because the business already consumed 1,500, then we have to make adjustment. So please, anyone can give me the answer how to adjust that part. Akil Firzi, please.
Yes, Pak. Is it supply expenses in the debit and the supplies in the credit?
Yes, we debit supplies expense because we record supplies expense because we already consumed the benefit of the supplies, and then we credit supplies because the supplies is now finished, is now used, it's now expired. Okay. Next, prepaid insurance totaling 4,500 has expired. According to the trial balance, prepaid insurance is still 9,000. However, some of them are expired. Better if I split this. Oh. So some of them now expired. 45,000. 4,500 has expired. Okay, the protection expired, the benefit expired. So how to adjust that item? Let me call you Nigella Sativa, please.
Yes, Pak. I think the debit one should be insurance expense, and the credit one is prepaid insurance.
Yes, you're right. We debit insurance expense because we consume the insurance benefit. We credit prepaid insurance because now the protection is expired, right? Okay, good. Next, equipment depreciation, 1,500. Equipment depreciation 1,500. We record them by debiting depreciation expense and crediting accumulative depreciation. Okay, wages 1,000 are unpaid. Means that we already consume the benefit or the service from the employee, but we have not paid their salary yet. So when we consume the benefit of the employee, we record expense, but because we haven't paid their salary or their wages, we have to record payables. So here we debit wages expense and we credit wages payable. Okay. Next, I give you this table to be filled. So by using these adjustment entries, you can move the balance to the respective column in adjustment part. So here I already posted the entry. For example, trade receivables, the first entry, you debit trade receivables and credit service revenue. So in adjustment column, I debit trade receivable and credit service revenue. And I do the same way for the rest of the journal. So then I fill the adjustment column like this. And again, the debit and the credit column total must be equal. Last, after doing adjustment, then I will, I think you can add two columns in your own file. This is additional column that I just added. So you can put the balance, the adjusted balance. For example, for the cash, there is no adjustment, so I just move the balance there. Trade receivable, we have debit balance 85,500, and then we also have another debit 10,500. So debit with debit, then we can add them together. So now the balance of the accounts receivable is 96,000. Supplies, the beginning balance is 4,500 on debit, but now it's credited 1,500. So the balance will be on debit 3,000, right? Okay. So you do the same thing for the rest of the account. And then you can fill the adjusted trial balance with the correct balance of the account.